Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing well. It's a pretty nice day here in central Ohio. It's in the 40s, so you really can't complain in January with that.
Yeah, no, that's a nice day. We had that yesterday. It was really nice here in central Missouri.
No,
Got
no.
a little rain out of it too, which is always welcomed.
Yeah, it rained a little bit overnight here, but it's not really too rainy now. A little bit, little cloudy, but
Yeah, we'll
yeah.
take it. We'll take it in January.
I figured I'd rather talk about whether to open the program than basketball because it's been a bad week for Mizzou basketball. So, but
Couple bad losses. We'll see if we can turn the tide. Arkansas is coming to town, so that'll be a fun game.
I'm back home. So, anyway, looking at the markets, we got some things shaken up over the last week. So, where are we really sitting today as compared to last week?
Yeah, sure. So those big USDA reports last week kind of impacting the market a little bit. Week over week changes. We saw old crop corn for March up 18 cents to 670. New crop December corn up 4 cents to 594. March soybeans up 29 to 15.17. New crop soybeans in November down 8 cents to 13.83. Soybean oil was flat at basically 63 cents per pound. Soybean meal was up $1 per short ton to trade right around $471 per short ton. Old crop wheat for March was down 8 cents to 733. New crop July wheat down 13 cents to 742. And then that West Texas Intermediate crude oil up $5.50 to $80, almost $81 per barrel.
So, some positives in corn and soybeans, and maybe some negative, pressure down into the wheat market there. And this will kind of lead into our topics today. But what were really the highlights coming out of last week, looking at those reports and other factors?
Sure, yeah. U.S. ethanol production increased 29 million gallons last week to 277 million gallons. That used approximately 93.5 million bushels of corn, but still down roughly 10% from normal levels seen at this time. Gasoline demand also remains sluggish, however, again, rebounding from that really cold spout in December. It was another week of disappointing ag export sales. Corn fell below all pre-report expectations again this week. Soybeans were on the lower end, and there wasn't any grain sorghum export sales again last week. That's 3 consecutive weeks of either negative or no grain sorghum sales. USDA supply and demand reports on Thursday provided bullish news for corn, bearish news for wheat, and then mixed signals on the soybean side. Open option positions were up across the board for Chicago wheats, corn, and soybeans. Wheat was up ever so slightly, corn up 1%, soybeans up 3%. Money managed positions increased for wheat, but were down for corn and soybeans.
On those trade expectations, at some point, can they start being a surprise anymore? With trade expectations.
Yeah, they continue, especially on the export sales side. It seems like we've had a month and a half here of just,
Sluggish.
disappointing export sales. Not even, I mean, yes, sluggish, but just disappointing, right? Like even below expectations.
Yep. Now, going back to some of the comments you were saying, the reports that came out last Thursday from USDA really boosted corn, kind of had some mixed signals, like you said, for soybeans and pushed wheat down a little bit. So it's kind of an interesting mix of factors that added into the market. I want to start talking about the ending stocks. So we saw ending stocks really for those 3 main commodities all get pushed downward. How much do you think that's going to impact some of the sales and the availability moving forward into 2023?
Yeah, sure. So the expectation heading into the report was that we might see enough demand curtail or reduction in demand for the crops that would increase ending stocks. So on corn, the expectation was maybe some reduction in exports that would increase ending stocks. Soybeans maybe a little bit on the export side front as well, but mostly just kind of stable ending stocks there. And then on the wheat side, kind of the same picture, a little bit of change in demand would increase ending stocks. What we ended up seeing demand come down for all 3 commodities, for corn and soybeans. Wheat, we actually saw a trade in demand, but for corn and soybeans, demand did come down, but the difference was that there was a reduction in production that actually increased ending stocks. So a bigger than anticipated reduction in production that kind of decreased stocks even further, even when the trade was anticipating a little bit of a growth in those stocks numbers.
Well, and then looking at your favorite commodity crop, we were looking at the wheat market. We saw some acreage, kind of be boosted there that might have led to a lot of those, losses that we saw coming out of the market. So, how big of a boost do you think this will be as far as production goes? And what does this mean going forward?
Yeah, so this was probably my second or third biggest surprise in the report from Thursday was the winter wheat estimate. So winter wheat plantings were up 11% year over year for winter wheat specifically. But this is always a challenge because it's up 11% from where we ended last year. If you look at where we were compared to a year ago, so last January of 22 with expectations for winter wheat and harvest in 2022, it's not that much different from the initial estimates last year. It's always important to remember that wheat's kind of an interesting crop, and the fact that a lot of it doesn't get harvested. I shouldn't say a lot of it. Some of it doesn't get harvested. It's abandoned for a number of reasons. If it's not looking good in the spring, it doesn't get fertilizer, and so therefore, it maybe gets tilled up and planted to corn and soybeans. Relative prices or relative profitability for corn and soybeans can pull winter wheat seedings out to other crops as well. And then finally, in some cases, winter wheat is a easy cover crop to put in over the winter months to allow something to grow on that acreage. There's also regulatory environments to where, if you want to apply traditional manure, biological manure, you have to have a growing crop to be able to apply that in some states. So that encourages wheat just to help with manure management. But there is chunks of it that don't get harvested, and I think that was a little bit of the whiplash we saw in the wheat market on Thursday. Was down pretty good after the report came out on this very bearish production estimate. But then I think the trade started to realize that some of this wheat's not going to get harvested. A prime example is in Missouri. Last year, we were pegged at 880,000 acres of wheat. We finished up down at 660,000 acres for the year. This year, we're pegged here in Missouri at 860,000 acres. Where we end up by the time we get around to June and July will be of interest. As I talk to producers, there is an intent to harvest as many acres as they can, but certainly many of them are also saying that it'll depend on the quality of that crop when we get to March, right around corn and soybean planting time.
So looking at that, kind of that 200,000 acres of loss there just within Missouri, is that outside of the realm of norm, or is that fairly average? What kind of insight do you have there?
Yeah, this is pretty normal. I mean, this is the nature of wheat markets. Everything I just said, we talk about here in Missouri that the estimate could be somewhere around 850,000 acres plus or minus 300,000 acres, right? So this is just the nature of wheat. It's what makes it a hard crop to kind of forecast, and it's also what makes it a fun crop to watch because of all the the intricate parts of that market.
And you talked about the wheat acreage change being one of the biggest surprises. What were some of the other big changes that maybe, a lot of, I guess, pre-report expectations weren't lining up with?
Sure. Yeah. So the biggest one that caught people off guard, including myself, just based on sheer magnitude, was the reduction in corn acres. We saw corn acres come down in 2022. So 2022 harvested corn acres down 1.64 million acres. Now, I'm not surprised that we saw a reduction in corn acres. A couple of reasons for that. It was very dry in the west and it was wet in the east. And so I thought maybe we'd see a little bit higher prevent plant come in, but I also felt like we'd see some abandonment in the west. And that's certainly what we saw. We saw, states like Kansas that suffered very heavily from drought this summer, down 710,000 acres in harvested corn. Nebraska was down 480,000 acres, South Dakota down 240. So not surprising in terms of where the drought came from. I think it was the magnitude that surprised people in terms of, just 1.64 million acres. That was, I think, out of the possibility for almost everybody in terms of that big of a change. Some of this is it's counted as failed. You and I wouldn't necessarily count it as failed because it's turned into silage, but since it's not used for grain, it is counted as a failed acreage on the grain balance sheet. So for some of these states, it was a need for forage. There wasn't grass, there wasn't feed basically available, and so some of this dry land corn, especially in corners of irrigation pivots, likely got chopped for silage, and therefore was a failed acre. Tied in with this, it kind of in a second breath here. I was not surprised to see the U.S. national average yield increase a bushel per acre on the corn balance sheet. Normally, when we see corn acres come down in harvested acres, you're taking your more vulnerable or your poorest crops out of production, and so then that has a tendency to increase the national yield. So I wasn't surprised with that until I started looking at the state-by-state numbers. We would have anticipated that the change in corn yield would have came in those same exact states: Nebraska, Kansas, South Dakota, Colorado, Oklahoma, and that's not where we saw it. The increase in corn yield actually came from states like Missouri, where we saw a 7 bushel per acre increase in corn yield. North Carolina, that was up 14 bushels per acre in corn yield. Minnesota up 4, Michigan up 4. So an interesting collection of states when you start looking at that state by state breakdown of corn yield increases.
Well, and then going off of that, talking about that dryness, just in Missouri over the summer, there were different, I guess, emergency, practices issued, different conservation grounds that are opened up for grazing, different things like that. So as we look throughout this past fall and this winter, how important is that snowfall, that soil recharge? Because, you think that in the Western Corn Belt, a lot of these growers might be coming into 2023 with a soil deficit.
Yeah, absolutely. It is incredibly important. It'll be important to get some moisture in the western part of the Corn Belt that we really haven't seen a whole lot of yet. The attention really for kind of breaking the drought has really kind of started to appear in like Colorado, really California, Nevada, parts of Colorado. But we haven't necessarily seen that drought buster in places like Nebraska and Kansas yet, which will impact the quality of and quantity of the winter wheat crop.
And then looking elsewhere, kind of the last crop we haven't really heavily talked about, soybeans. We saw some mixed signals coming into the soybean market. How do you foresee that affecting trade and maybe the soybean pricing throughout, the next couple of months as we really kind of move in from the winter heading into the spring planting season?
Yeah, sure. So soybeans was one that was up big early. It was a shock on the supply side. It was a double whammy. We saw a reduction in soybean acres and a reduction in yield that pulled down production. Again, we also saw a reduction in demand. Soybean exports were trimmed, 55 million bushels from the balance sheet. But again, we had a 70 million bushel reduction in production. So that's what led to the decrease in soybean stock. So that's what shocked the trade, I think, to a positive, a bullish, I shouldn't call it positive, but a bullish, price increase for soybeans. The interesting thing is there was actually some bearish fundamentals in this report, and I think they've started to play out in the market over the last couple of days and will likely, play out today as well as we see the market open for the trading week. Global supplies of soybeans increased. We saw a increase in global production of soybeans that then translated into an increase in ending stocks. Probably of most note to me, and I don't want to overstate this, but I certainly want to acknowledge it, was the 2.5 million metric ton increase in Brazil's soybean production for last year. So the 2022 soybean crop, that was a crop that was hampered by dryness all last year. It fell well below expectations. I think what you see now is people saying, hey, maybe it was a little better than what we thought. And so they went back and revised that production estimate up 2.5 million metric tons. That increased beginning stocks for the current year 3 million metric tons. So again, I don't want to overstate this, but I want to acknowledge that change alone isn't making headlines because it happened in a year that we've largely closed the books on, but it certainly provides more soybeans to the global market. A lot of that increase is offsetting the decrease that we saw in places like Argentina's soybean crop. And so While the trade was anticipating that Argentina would be down and that their crop would struggle, was maybe not anticipating a growing Brazilian old crop for the year.
All right, Ben. So coming off of a big report week last week and then the shortened trading week this week, what reports do farmers and ranchers need to be paying attention to?
Yeah, pretty normal week. Energy on Wednesday, export sales again on Thursday. We do get export inspections on Tuesday of this week because the markets were closed on Monday. So we'll have maybe some interesting data in that report, and then just that Commodity Futures and Trading Commission report on Friday.
All right, Ben, it's always a pleasure. Listeners, viewers, if you'd like to learn more about what we do or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.